Hello traders, this is Brian from FinancialTradingJournal.com and welcome to this week's FX Weekly Analysis. Today is Saturday, June 22nd, 2013. Before I start, I just want to say something real quick for the new people that have been following my FX Weekly Analysis lately and this new series. Yes, I acknowledge the fact that I was right on all my forecasts this week and they all won by a landslide. That wouldn't be possible if not for the FOMC meeting. If the FOMC meeting went the exact opposite way, my forecast would have been completely wrong and destroyed. So for those of you that missed the trade or missed the run, so to say, this week, based on my forecast last week, don't be tempted to follow it exactly as it is next week, because it could just go opposite as well, and I could be completely wrong next week. As mentioned in the risk disclaimer at the beginning of this video and every video in this series so far, this is not a signal service, so this is educational only. So if you are trading next week and you missed the run this week, try to trade rationally. Don't just go on tilt and just follow Brian because he was right last week. Don't do that. You need to put in your own analysis as well and trade wherever you see the opportunity arise. And if the opportunity does arise but it goes opposite, make sure you have stop losses to make sure that you don't wipe your account just following the analysis blindly. So that's all I wanted to say. So let's get started. So first up, we have the dollar CAD. Dollar CAD this week, as you can see on the monthly chart, we closed above the weekly trend line that I drew previously. Last week I corrected it, and this week, based on the corrected trend line, we are closing above right now, but we do still have a week left. We have a week left before this quarter ends, so this will mark the end of Q2, the second quarter of the year, and it will also mark half of the year's past. Yesterday, the third Friday of June was yesterday. That was, I think they call it the quadruple or triple witching day, which is basically the day where you have 3 or 4 option expiries. So I think it was like stock index futures, stock index options, stock options, and I think there's one other one. I'm not sure what it is because I don't trade options and futures, so I'm not really sure. But that the closing expiry day for those options and futures causes market volatility. So the current close may be skewed because this is a close that the option traders wanted. We don't know what's going to happen going forwards. It could completely reverse next week. We don't know yet. But if the month on the dollar CAD closes as it is, like it is right now, that's a good sign for what's to come in the future, because if we break out of this, the first target is up here at the 1.087 mark, and then past that, if we break that, then I mean that will be breaking highs from way back from 2010. Breaking that would be we'll be targeting somewhere up here in the short term. After that is 1.18, and then way up here at 1.3. So yeah, so that's it for the monthly chart. Moving on to the weekly chart. The only thing I wanted to show on the weekly chart was we did bounce from last week's close. We didn't go down as I thought it would, because ideally at this point it already broke the 61.8 last week, and I thought it was going to go down to the magenta line. That's actually where I had buy orders set up, but it never got down there, so I missed that entry on this pair. That's all I want to show, that it bounced off the 61.8 and we broke the highs that was from 3 weeks ago at 1.042, I believe that was a high, and we broke that and we closed above it on the weekly. So that's really bullish on the weekly time frame. At this point in time, based on this breaking the weekly trend line and closing above it on a weekly chart, I will be changing my long-term forecast on the dollar CAD back to bullish, going up. Going to the daily chart, it's just a zoomed in version of what happened on the weekly chart. There's nothing else to say here. It's just you can see that this is the reason why I forecasted that it might go down is because it actually closed below the 61.8 with this red candle, and I was hoping to get an entry somewhere down here, but that didn't happen. So that's all I have to say there. On the H4 chart, what I have drawn is a fib line for this recent uptrace for potential reverse or retracement levels. 61.8 is way down here below the weekly. I don't think that's going to happen. What I think likely will happen is it might retrace to the recent high, which was 1.042, which is down here, which is also coinciding with where the weekly trend line is. So that would be a possible retrace. This has to hold, this level must hold for it to continue going up. But even if it does break, the real support, I guess, would be this resistance that was previously troubling the markets on Thursday and Wednesday, I believe. This was the initial run up right after the FOMC, and then it kept going up, and then on Thursday it stalled around here for consolidation, and then before it went up on we had bad Canadian data yesterday, so that's why this initial spike happened there. But this would be another level of interest as well, the 1.04, that's a round number, and right below it is right here is 1.039. So those are potential retrace levels somewhere down here. So if we were to draw a rectangle, which I don't draw this that often, but you'd be looking at somewhere like here. That yellow area is a potential bounce point for the dollar CAD in the coming week. Next up, we have the Aussie dollar. Currently, as I already mentioned, there is a week left, so this month may not close like this, and yesterday was that special day for options. But if the monthly closes like it is right now, this is starting to really shape up to be a big drop down. I mean, first targets, you're looking at this low here, and then beyond that, you're looking down here, possibly here or down here, but this is long term. So that's it for the monthly chart. Hopefully it closes below the 9.4 level, and that's also where we'll be retracing, as I'll talk about when we go to the other time frames. So zooming to the weekly chart also closed below, so that's a good sign. This green bar last week we had in no man's land. I told you guys no trades. If you guys had wanted to trade this week, the best entry would have been a sell stop right below the 9.4 level for to get the drop. If next week going forwards, I wouldn't be surprised if there was a retrace up to the 9.4 level before going back down. So you'll have a green candle initially for the first couple days of the week, and then after that it'll be a red candle going down. So that's all I want to say there. Daily chart. Previously I had this bearish flag here. The bearish flag did develop this week. It broke out here. We haven't really moved that much below it. You did see that we did retrace up to there as well, as you can see once we zoom into the H4. It was actually a consolidation channel for the last 2 days. We did retrace up to the bottom trend line. That's where the breakout happened. That might have been a short-term entry, but I personally don't like that entry. I would wait until up here. But overall, though, the Aussie dollar is not something I like trading, because this has been fairly one directional. It's just been straight down since 1.58. I started watching it when it was around 1.025. Like it's in terms of my own trading, I started watching it here, and I did trade some of this drop over here, but I didn't get much of this because this was just consolidation. So I just stopped looking at it until Wednesday this week when the FOMC came out, and then this drop happened. So I mean, it could be the beginning of a new slide, just like I mentioned on the weekly and the monthly time frame. As far as the H4 goes, as you can see here, we consolidated in the last 2 days. So markets is primed, I guess, to move in one direction once we break out of this channel. So I mean, you could have like buy stops above and sell stops below, but honestly speaking, the downside potential is much higher than the upside, because downside could just keep going as forecasted on the weekly and the monthly, but upside you're limited up to here only. So your risk to reward is much better to the downside, but the entry would be somewhere up here around the 50 or 61% level of the fib retracement, which is also coinciding with the 3-4 level as your resistance level. So somewhere in this region, I'll insert another rectangle to show what I'm talking about. Somewhere up here like this, that's a possible area of interest to load shorts. So that's it for the Aussie dollar. Up next we have the Euro dollar. The Euro dollar monthly chart. So unlike the Aussie dollar, we do not have a red candle on the Euro dollar. As I mentioned in previous weeks, Euro dollar is the weird one. We're still in that channel. Like we broke back into it this week, as I'll show you once we go to the H4 and daily chart. But this is still a pretty weird monthly candle because it's not red like the other pairs. But we do have a pin bar, if you can call it that. You have this long wick, as I mentioned in the mini lesson last week of pin bars. This is a shooting star. You have a long upper wick and a small body, but obviously this month isn't over yet, and that's not really a top because this is in the middle. The top would have been somewhere up here. That would have been the top. The top is classified by white space on the left, and there is some white space here, but you have this candles right here, so it's not a top. This is more of an in the middle pin bar, which doesn't really mean much. So that's all I have to say there. As far as the monthly chart goes, this just shows that I don't know if I had this trend line drawn last week. I don't remember. But that was a trend line that I noticed this week, and we broke back inside of this daily channel. This aqua line was right there. Yes, last week I mentioned that price would pull back to that and then go up for the last week's forecast, and then this week it went right back down, given that we were at the 61.8 fib level. So that was a potential, one of the potentials plays for last week, because we were at a pivot point, so to say, to either go up to here to hit the weekly trend line up there, or to go down. So we did go back down, and we did break the aqua support. So we're back inside the channel now. Going forwards, I expect some type of retrace and possibly go back down, and I'll show you guys why when I go to the H4 chart. Daily chart just shows a zoomed in version of what happened on the weekly chart. There's nothing to say there. It would be too early to draw a trend line. There's no trend yet unless we get a bounce, which could happen, and that's all I have to say there. On the H4 chart, it will seem a little congested at first because I have two things, and I'll remove one of the fib lines. First thing I want to draw your attention to is the blue fib line, which was drawn from the low down here to the recent highs. We bounced this week off of the 50% fib level, so that's why I want to show that. So this is the 50% fib level, this blue level right here, and we bounced off of that. So now that I got that out of the way, I'm going to remove this fib line so that we can focus on the green fib line. And I'll zoom in for this. So basically what happened was we bounced off the 50% fib of the recent uptrend. But now, given this downtrend, do we bounce here or do we continue down? That's the question. If we do bounce here, I drew this trend line based on that low and that low. So this trend line, I made it into a parallel line and I dragged it back up to here, which is from that high there. So we're expecting some bounce point up here if it does bounce from here. So I drew a fib line for the recent drop from Wednesday till now. Possible retrace levels are up here at the 50% fib level. I don't see the 61.8 fib level happening because that's just one straight candle up here. That'd be too wild to have a one-day candle, or actually this is a 4-hour candle. So to have 4-hour candle on Sunday night to get up to 61.8, that's not going to happen. So the next level, given that time is going to move something like this or something like that, potential levels are the 50% fib level or the 38.2. But the levels were around the 50% would be around the high, so that would be a little weird. It should be lower highs, so I would assume somewhere here. But this whole region is a fair game, so let's just put in a little rectangle there. We're looking for some type of retrace up to here. If it does bounce, that would be a possible loading position for shorts, or maybe set some sell stops below here to get down there. But I don't see that happening. It should retrace a little bit because we've been going down for quite a number of 4-hour red candles so far. So I expect some type of retrace up to here, or even the aqua line that's right at the bottom of the yellow rectangle. That's a possible re-entry there. So yeah, so that's all I have to say for the Euro USD. Last one is the pound dollar. Pound dollar monthly chart. We did bounce off of that weekly trend line, as I'll zoom in later. And this is similar candle to Euro USD where we have a shooting star. Although the body here is bigger than the body on the Euro. So that's all I have to say there. Weekly chart shows a big red candle. That big red candle is also engulfing this green candle. I don't know if it'll retrace or not, because based on the previous bounce down, this one from the 1.56 level, this one, the next two candles were red. So this one, the next two candles could be also red. So that's all I have to say for the weekly chart. Daily chart, we could go down, or we could retrace and then do a little hump like this. That would be the right shoulder, I guess, on looking at this area. So you have the left shoulder, the head, and then the right shoulder going down, and then it would go down to here. Or if it just goes straight down now, then it'll be targeting here. So depending on when we get there, this is the first target. And then if it breaks that, this overall is a bearish flag, because you have the flagpole here and this is the flag. So if it breaks this trend line, then we're targeting way down there, and we'd be targeting like somewhere down there. First target would be here, but eventually, as I mentioned in I think a couple forecasts last week or the month before that, the long-term target is down at 1.42 or something. So that's from here, that's about 1,200 pips. So that's quite a while away. But short term, we're looking at bounce going back down to this weekly trend line down here as first targets. So on the 4-hour chart, same thing as the Euro USD. I have two fib lines drawn. First one is the blue, as I wanted to point your attention to. This is also the 50% fib level that price bounced off of this week. We did puncture, but we closed above it. And this is also a pin bar. A pin bar on right there, that green pin bar. That looks pretty good. But this red candle right next to it is not a good confirmation, so that's kind of bad. So that doesn't look good for a retrace. So let's just get rid of the blue one now. So you guys saw that that's the 50% fib level, which is why we bounced in the short term. If we do bounce from here on out in next week, possible retrace levels are up here, given the green retrace tool. What we're looking at is either this trend line, which is really sharp and narrow, because this is drawn from a parallel line from this lower trend line. I just parallel line up to there. We did bounce from there and there already, so, and this is fairly close as well, so I mean it could just go straight down as well. Otherwise, retrace would be up to here, back testing the 1.545 level. If that one breaks though, so I'm just going to delete this temporarily, then what we're looking at is possible retrace levels up here, and that actually looks better. Is we have the 50% fib level here at 1.555, and we also have the 38.2 at 1.552, and that coincides with the recent highs as well at 1.552, I believe. So yeah, so up there is possible retrace levels. So you have this area there, and if we bring back the other trend line, then the other level of interest would be somewhere like this. So you'd have something like this. Those are two potential loading areas. Preferably you want this one, because the euro has to go up that much as well. So this one is more likely than this one, so this one's a higher probability up there. So that's it for the pound dollar. And that concludes this week's FX Weekly Analysis. As I mentioned previously, be careful trading next week, because A, I might not be right all the time. B, yesterday was quadruple witching day, so that was option expiries. C, next week is the end of the second quarter, Q2. It's also the end of the month, and it's also the end of the first half of this year. So next week is a very special week in terms of where we are in the year. So be careful trading. So that's it. Hope you guys enjoyed this week's FX Weekly Analysis, and I will see you guys next Saturday for the first FX Weekly Analysis of Q3 and the second half of this year.